Welcome everyone to the latest Verve Group video update. Today I thought I'd take a different tact and talk specifically financial planning, because obviously a lot of financial planning clients out there, there's a lot of turmoil. I've got Craig Holly, our fellow financial planner at Verve Group. How are you, Craig?
Good, thanks Matt. Hi everyone. Hope you're keeping well in these difficult times. So Matt, what's on the agenda for today?
If I can just quickly bring up the slides. Hopefully technology looks after us. So I thought we'd run through a bit of an April update. So a bit of what's happening here, and then we'll talk about the markets and how that affects people, and finish with a few tips. So office update, yes, we're still social distancing here. So we are, Craig and I are in different rooms, actually in the office today, not at home, but most of the team are working from home. That's working, it's been a month down now, it's working quite well. All our appointments are via Zoom and telephone, and clients picked up Zoom exceptionally, so don't be afraid of Zoom, it's a great little tool. I had a review the other day with a client and they put me on their TV, so actually mirrored off their mobile phone, and I was sitting up on their TV, would have scared the dog, but anyway, that worked quite well. We're starting to use DocuSign with a lot of clients. So it's digital signing forms where possible, so saving snail mail. And the key with that is each individual has to have an email address. So as a couple, we need an email address for each person. So if you've changed your email address recently, please let us know. That saves plenty of time. And then the other one that's obviously topical, we've released a few videos on this, but I thought, Craig, you could give us a quick update on the stimulus package and how specifically some of those measures affect some of our financial planning clients.
Sure, Matt. Well, the first one on the list there, so early access to super, yes, you have a chance to access up to $10,000 twice. So firstly, the first tranche is before June this year. Then after July for another lot of 10,000 out of your super. But the key thing here is that really this should be a last resort. First and foremost should be accessing savings, redraw facility, offset accounts, things like that. And then also putting your loans on hold if possible, if your facility allows that. And then, on the back of that, yeah, like I said, last resort, yes, the opportunity is there to release the super, but the difference in your long-term retirement savings come retirement can be a huge difference in taking that money out now. So generally it's not recommended. Reduction in pension drawdowns. So the government's halved that, which is similar to what happened in the GFC, which is good. So if cash flow is fine, then we can look at reducing pension payments down by half. But the important thing to realise is that if you've already met your minimum for this financial year, and we do reduce that to 50%, then that can reduce your pension payments to nil for the rest of the financial year, which may not be ideal. So we just need to think about that scenario. And the last on the list there, the $750 from Centrelink, which has already started coming through this month. Second payment will be in mid to late July for the second lot of that. So on the back of that, there's also a lot happening in the markets. So Matt, do you have any updates on that?
Yeah, thanks, Craig. So it's quite topical, obviously. Got the virus, we've got government throwing money, trying to keep the economy flowing. Obviously, just recently, or this morning, oil prices went negative in America, so that was quite interesting. And there's been a lot of panic out there. So if we have a quick look, it's a simple little graph here, but just showing what's happened this year. So that the important thing a lot of people need to realise is investment markets have come off the back of, to the end of January, come off 25% returns, Aussie and international shares. So we'd had 3, 4, 5 years of really good returns. So yes, there's been a 30% drop in the last sort of 3 or 4 weeks. It has picked up the last 2 weeks, come back about 10% roughly, and it's been zigzagging around. So very short term, been a lot of panic, and now things are starting to normalise, but it is going to be volatile going forward as unexpected news comes out. So it is going to zigzag around a little bit. And probably the last major crisis, I suppose, if we look back at history, is the GFC. So, Craig, I'll just flick to a slide on this one, and you might be able to add a bit of commentary to it. So,
thanks, Matt. Yeah, so this one basically shows us you would have heard of bull markets and bear markets. So obviously bear markets, like we're in at the moment, heavily, a lot of downside happening in the markets, which isn't ideal. But when you look at the flip side of that, on the back of these bear markets, the bull run years are very positive. So the main key here is, yes, markets are off at the moment, share prices are down, but the important thing is you're still getting your dividends off of these shares, so it actually would be a worse time to sell right now. The best thing to do basically is to sit on your hands, wait until this market pops back up, because history tells us it will, and when it does, it could actually happen very quickly. So we want to make sure we're a part of that, and we're accessing that growth. So you know, the markets are driven by emotions, so it's hard when there's a lot of panic going on, whether it's health, finance, a whole string of things happening at the moment. So when markets are based on emotions, our job is to strip the emotions out of the markets and say, look, is it a good time to invest? Is it a good time to sell, buy, whatever it may be? So if we can take emotions out and actually say, look, markets are on sale at the moment. Have we got money to chip in? Yes, no. And we've been through this, as the chart shows us there. We've been through bear markets before. We're going through one now, and history tells us we'll go through another one. But the important thing is just to stay invested. That's the key, the key tip there, just so we can be a part of that upswing when the market does go up. So Matt, do you have any tips for volatile times?
Yeah, so thanks, Craig. Pretty informative. I think the big one out of that takeout I got was about taking the emotion out of it, and I think that's one of probably our most important jobs at the top as an advisor, is to actually help people make informed decisions with taking emotion out. So money is obviously very emotional, but our job's to just be sitting there holding your hand, making sure you're making the correct decisions. So we put together a few tips of what to do in these volatile times, and it's essentially a bit of a line in the sand and taking stock. So have your goals or circumstances changed? So a lot of the time people's goals haven't changed. Sometimes circumstances have changed. So yes, if a job's been lost, etc., yes, that's time to reassess and obviously pick up the phone and have a chat to us. Are you still a long-term investor? So we always sort of preach about having money in different buckets. So if there is a crash, you can afford to ride out the bad times. So with that, diversification is the key. So there's no use having all your money in the share market. It can be a bumpy ride in the short term. And on the other side of things, no use having all your money in cash, given that you're getting less than 1% for returns at the moment. Markets will rebound. They will come back. When? If we knew that, we wouldn't be sitting here, but the key is to stay invested, because if you miss those up times or sell out low, you're locking in some long-term sort of losses there. So you want to stay invested for the long term. All our financial planning clients, we catch up with them at least annually, and talking to them a lot more often than that. So now is the time for people that haven't got an advisor or don't look at their finances very often, is to sit down and have a financial health check. Potentially may have some time at the moment if we're stuck at home, etc. Go through and reassess. Look at your insurances, look at your supers, your investments, etc. And obviously, if you need help, seek professional advice, because obviously, as Craig was saying, making some emotional decisions without getting sound advice can be obviously financially detrimental to you. So come and give us a call. We've got plenty of good resources here we can share with you and help educate you on what to do as well. So that's about it from me, Craig. Anything from yourself in closing?
No, I guess just the key point there, Matt, was yeah, just get in touch with us. Even if it's a small question like, should I be investing in the share market, or up to the bigger questions, am I okay to retire now? So just please get in touch. We're here to help, happy to help. what we do. Yeah, so looking forward to hearing from you all soon.
Yep, thanks for that, Craig. And here to help, put up our website there. There's we've got a COVID-19 tab on there. It's got all our videos. So if you need to refresh anything, go back there and we'll talk soon. Thank you.